the initial statement was the 75 basis point hike, which we all expected, right? That was already priced into the market. The verbiage did change in the statement, and that was the key initially to why the markets took off to the upside. Basically, Jerome Powell said that they're going to take into account past rate hikes and how the lagging indicator or the lagging impact of it will affect the markets. And that was something new that wasn't in any past statements, which tells us that they are aware that these rate hikes that they've been hammering the market with take a while to be filtered through. So they don't want to overdo it and cause a collapse. And what's interesting here is that we did see the initial pop on the Bitcoin chart, and we did see it come back in. But the one weird thing about crypto is it's been very muted in terms of the volatility, right? So we haven't seen, when the S&P's been dropping, 2-3% in a day, crypto's actually held up relatively well. And today, again, you could see crypto, I mean, basically from where the statement started, we're essentially flat. I mean, maybe even slightly positive here. We're starting to get a little bit of a bounce up. So it is interesting to see how the crypto market has almost been the calm market when you look at the currency markets, the stock market, the commodities market. It's actually been the chill market. Yeah, I think there's a small percentage of that. I also think that there's, because of the dollar's strength and the stress that it's been putting on the pound, the euro, the Japanese yen, I do think that there's a certain amount of investors in those countries that have said, hey, listen, let me maybe go into, Bitcoin as protection in this wilder currency Forex market. And then I think bottom line is there's this weird calm in the Bitcoin and the crypto market, as everyone's waiting for the judge's decision on Ripple, right, is coming up later this month, I think. And then also just any sort of regulation from Gary Gensler. And I think that once the midterms are over, that's where you could see that kind of clarification on the crypto market. So I think it's a combination of a lot of things that are keeping it a little bit more sideways choppiness right now. To me, that's one of the more important reasons for the Fed to kind of stop hiking, is that if they hike too much more, the dollar is going to strengthen. And at some point, you will see a catastrophic credit collapse, a money collapse in some of these other countries. There's no doubt. I mean, anytime you end up making the banks hold on to more money and not able to lend it out, that will have the impact of meaning less money in the system, which inevitably would bring down inflation. I think the Fed is trying to do it from the opposite side, right? By raising interest rates so much, essentially it's making the consumer. So you're talking from the banking side, but by raising interest rates, you're making the consumer basically say, I can't afford a mortgage payment with 7% interest or 7.5% interest. And so it kind of works in that side of the equation. But I agree that you could tackle it on that side. Absolutely. A couple things that are worth noting here is, so initially when the Fed changed their verbiage in the statement, we saw the dollar collapse really quickly. And then during the press conference, we've seen the dollar roar back. And what's interesting here is that the market had pointed expectations before this meeting. And basically we're saying we expect by a certain point in 2023 to have a Fed funds rate of 5%. And essentially we're still at that point, right? We're still at this, we're basically trading where the dollar was prior, which tells us that, again, the market, even after this whipsaw, we're kind of back to where we started, where the Fed hasn't pivoted enough to create the dollar to weaken significantly. And again, we're seeing the rally back that's telling us that. So again, I think that's the key takeaway, at least as of now. The dollar's not weakening. So in other words, the Fed is still remaining pretty hawkish here. And what that tells you, honestly, what it tells us is that the crypto markets, as well as commodities, currencies, everything, the Fed is controlling it all. I mean, it's almost like the market isn't even a market anymore. It's just a market that's trading based on what the Fed does. Whether it's something that breaks because of the strength in the dollar and what the Fed's doing, whether it's something geopolitical, it's inevitable that we will have it. I mean, we saw it with COVID, when COVID emerged and the markets collapsed. Something will happen. And the biggest scary thing here is that everything that this market does, and we're talking all asset classes, is relying on the Fed. We've become basically attached like a drug dealer with a drug addict, right? And the Fed is the drug dealer and the markets are the drug addict. And without the Fed, you see what the asset prices are doing. They're collapsing. With the Fed, the high can go on. Yeah, so one of the cool things on Ethereum here is that we're actually making a same sort of bullish pattern, but we're right below this resistance here. So the key is if we can make a good enough resistance kind of or consolidation pattern, and you pop and you get through that line, you actually have good upside to maybe 2000. And I think it's very possible that if Bitcoin goes to 25 or so, at least you see 2000 on Ethereum in the near term. So I think, again, that would be kind of the target. There's even a small chance 2300 could be seen, which would be this kind of major pivot area right in here. So again, those are the two levels I'm watching. But number one, we got to break through this downsloping resistance level. Right now, the charts are still holding true. But if the dollar starts to rip too much more here, and you can see the dollar's now making short-term highs here, we're almost taking out the highs from before the Fed. In fact, we are. I mean, if the dollar really continues to strengthen, let's say for the next 2 weeks, then the crypto market has no shot, of making a breakout. So it really becomes really influential on this in terms of what the market is doing and what the Fed is causing in the dollar. Yeah, so I really do think that there's still more pain. I don't even,
I'm in that agreement. I'm in that. I just wanted to see where your head was at.
Yeah, I mean, some of the things that kind of make me aware of this is that, number one, we haven't seen like you haven't really seen pain yet. We haven't seen people throwing in the towel saying Bitcoin's over. And in all the past cycles where we've had the bearish move, we've seen that happen. In addition, this is the first cycle where the Fed's not printing money, right? So here, I think Bitcoin's only down about 70 or 75%. All past cycles where they've been printing money, it went down 85%. So who are we to say that now the one time where it should go down even more, it's not even going to go down 80 to 85%. So for me, everything kind of aligns that we should see a move to the downside. But I mean,
we can't really target when
regulation, it could change. Yeah, look at this drop on gold, by the way. Holy cow, gold's getting smoked right now. But I still continue to be bullish. I think that the Fed, again, is at a point where they can't, and this is my thesis for why I'm bullish on metals and Bitcoin partially, not just the charts, but it's basically that we're in a scenario where you have the Fed saying, we understand that the dollar yen, the euro, the pound are at breaking points against the dollar, and therefore we have to be very careful not to let the dollar strengthen too much. So, to me, that if you see the dollar up for the next week or two, you're going to see a global catastrophic collapse potentially in the charts. And that puts us at risk of a bigger kind of contagion aspect. And I think that is something that the Fed, if they're not aware of that, they're doing a huge, huge disservice to the overall market. I mean, that's the ultimate downfall, right? Is that if you piss off enough of these big countries and they say, oh, they're not worried about us, we're going to start taking care of ourselves and not thinking globally, that's when the whole system starts crashing down. And that's a huge, huge risk. Absolutely.